Joseph, the Indian energy conglomerate Reliance has crossed paths with the Common Man Party of India. And let me ask you this. I've seen the populism versus company movie before in India. Why would I, as an investor, do anything but run for it at this point?
Well, sure, you can always do that, but you have to look at what the issue here is. And in the short term, at least, it's not a reason to run away, I think. So, I mean, this week, India's election commission deferred a hike to gas prices, which would have benefited Reliance Industries, which needs the incentive to produce more gas. And the Common Man Party had been beating the drum and saying, well, look, if we come to power in the election in a few weeks' time, gas will be $3 to $4 per unit compared to the increase to $8 per unit, which was on the table.
Right, and
right?
this
so
is
clearly politically
domestically
motivated.
produced gas for the domestic market. Just
Yeah,
to
I mean,
be clear.
4/5 of the sort of the gas consumed in India, so it's a big deal,
Right.
really.
So given that this is a democracy and to a certain extent a populist democracy, why would we ever think that Reliance is going to be allowed to exploit this resource, specifically this gas field in the Bay of Bengal, in an economic way?
Well, I mean, because this has happened because of the election risk. Well, that means if a reformist government is elected afterwards, then they'll just carry on with the hike anyway. And then there is a good chance of that. The Common Man Party may not get in. I mean, it may have an influence in one of the coalition, comes after the election, but political risk works both ways essentially. And
but I guess the question I'm asking you, why doesn't the pressure to keep the prices low in one form or another continue forever? What demands higher prices, right?
Yeah, I think this has been such a long-term problem for India. I mean, you have to look at, so for example, India's current account deficit, which has averaged about 3 to 4% of GDP since 2008. People always say, oh, that's because India imports a lot of gold. That's not the only thing. They also import quite a lot of oil because their own gas market isn't very developed, right? And then that cannot go on forever. They want to fix that current account deficit and become a home for foreign investment. And Reliance Industries, for example, has a huge sort of deep water gas field off the Bay of Bengal, which, if developed at the right price, could be a very key part of the sort of eastern gas market in India. So there is a lot of at stake here.
So it seems that the takeaway is we have a small argument over a price hike and a large argument about India investing in infrastructure and attracting capital from abroad.
Yeah.
Thanks, Joseph.